Hello everyone. This is the pre-market report video for today, 14th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Last night, before the US market opening, Bureau of Labor Statistics released the US inflation for January month. So let's look at those in detail. First, the overall inflation on yearly basis for January month decreased significantly to 3.1%. In comparison, it was down from the 3.4% in December month, which was okay, but the problem is in the last 2-3 days, most of the analysts as an average forecasted that they expect the inflation to come just to 2.9%. So, though the overall number 0.3% decreased compared to December month, the inflation still exceeded the analyst expectation by 0.2%. So, this is not in favor of the stock market. In addition, if we see the core inflation, which excludes the food and fuel, for January month it comes as 3.9%, same as December month, it haven't dropped any, and again the problem is analysts expected it to drop 3.7%. Now the actual data comes as 0.2% above the expectation, which means 0.3% drop in overall inflation. All of them was dropped just from food and fuel, which was not a good sign, and overall the inflation data indicates the furthermore persistent inflation pressure. In reaction to that, US 10-year bond yield jumped over 3% and moved above 4.32%. Again, not just the 10-year bond yield, all the time period treasury yield, 2-year, 5-year, 30-year, all jumped over 3%. I mean, after the Fed FOMC meeting 2 weeks back, most of us and all the investors around the world kind of prepared that Fed was not going to cut the interest rate in the March month. But now for May month, if required, please pause and have a look. A month ago, Fed interest rate monitoring tool shows over 95% chance that Fed will cut the interest rate. Last Friday, that dropped to 67% chance. Yesterday, it was around 55% chance. Then after this inflation data, last night, it further dropped to just 35%. So basically, even May month also, 65% chance Fed is not going to reduce the interest rate. As a deck of cards, inflation was worse, which made the treasury yield worse and the Fed interest rate chance to the worst. All these influenced the whole US stock market as negative. I mean, in the last video, we discussed this. On Monday night, in entire New York Stock Exchange, the advanced decline ratio was around 4.3. That last night crashed to just 0.1. Meaning, for every one stock increase in NSE, 10 stocks declined. So almost all the list last night declined. Then index wise, Dow Jones crashed down over 500 points, S&P 500 down by 1.37% and Nasdaq also crashed near 300 points. And in line with that, VIX increased to 14% and moved near 16 from below 14 on Monday night. Regarding oil, OPEC plus countries released their monthly oil forecast, and for 2024 whole year they kept the forecast unchanged as same as December month. So they expect the oil demand to increase near 2.2 million barrels per day higher compared to 2023 average day volume. They cited the strong economy as a reason, which in turn increased the oil price by around 1%. At the time of this video, WTI is trading near $78 per barrel and Brent crude closed at $82.5 per barrel for the March month delivery. Coming to Indian areas, in line with the US market, both Infosys and HDFC Bank crashed above 1% despite both of them closed positive in Indian market. Then Wipro in Indian market, it was increased over 2%, but that was not happened last night in ADR. However, only ICICI Bank in line with Indian market closed over 1% positive. So the takeaway from the ADR is, except ICICI Bank, all other three indicating the negative trade, and ICICI Bank was lagging the Indian market. So in ICICI Bank, anything can happen. No definite clue from ADR. Regarding GIFT Nifty, it also crashed. During US market trading time, it dropped below 21,600, but at 3 AM Indian Standard Time, it recovered some and closed at 21,650. So equating it to the spot market, it's kind of indicating 100 to 150 points gap down opening. So this is what happened in the global market. Now let's move to the Indian market related info. First, some important takeaways from yesterday's market. One of the important reasons for yesterday's Indian market positivity was due to this MSCI rebalancing review. We discussed this mildly in the last pre-market video, and in line with that, MSCI did made an announcement that they are going to add this 5 PSU stocks such as Punjab National Bank, BHEL, Union Bank of India, NHPC and GMR Infra. So that's the first good thing. In addition, if required, please pause and have a look. This is how the MSCI Emerging Market Index weightage changed over the time in the last 8 odd years. In 2021, China accounts for over 40%. From there, in the last 2 years, it dropped to just 25.4%. In contrast, from below 10%, India's weightage increased to 18.2% from March 1st onwards. At present, in the next 8 trading sessions, the present weightage will be 17.9%. So this weightage will increase to 18.2% on March 1st, which expect to bring additional 10,000 crore rupees into the Indian stock market. Again, if required, please pause and have a look. The numbers in the million US dollar term, as per Nuvama analysis, this is the list that how much the amount expect to add or decrease in their respective stock portfolio due to this rebalancing. Moving on, about institutions, for the second day in a row, both FII and DII were net buyers. FII net bought for 375 crore rupees, whereas DII net bought for around 275 crore rupees. Second, a year ago, because of this Hindenburg issue, Moody's downgraded the Adani stock to negative. Now, after a year, yesterday evening, they upgraded the stock to stable. And also, Jefferies gave the new buy rating. So, despite this US inflation, possibly Adani stock might trade positive. Finally, yesterday, again RBI made an announcement that they are going to conduct a VRR today. According to me, this is very negative for banks, especially large private banks. Now again today, 4 days and 5 working days, all indicating the serious liquidity issue in the banks. Again, it won't damage the fundamentals of the banks, but it will slow the growth of the bank. Maybe because RBI continuously supporting, so market might start to take this as positive as well. As a summary, US market closed on the very much negative note. In line with that, GIFT Nifty and Indian ADR all indicating the gap down opening of 100 to 150 points. Then yesterday, as per stock open interest, Hindalco, MCX India, Ipaca Labs, Apollo Tyres, BHEL, National Aluminium and Titan got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Bosch, ICICI Bank, IndusInd Bank, Voltas, Birlasoft and Infosys got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, M&M, Crompton Greaves, Glenmark Pharma, Ipaca Lab, Muthoot Finance are some of the major Indian companies' earnings results are scheduled to release today. In terms of macro, during our market hours at 12 p.m., India's wholesale inflation data is due. Then at 12:30, UK's consumer inflation and wholesale inflation data are scheduled to release. After our market close at 3:30 p.m., Europe's GDP growth data is due. Then for US, crude oil inventories report and Fed Vice Chairman's press conference are the important items we need to keep an eye out today. Coming to technical, Nifty opened 50 points gap up and with volatility it swung in both directions and ultimately closed positive 127 points. Thus, on the daily chart, it formed a green candlestick pattern with a long lower shadow which resembles hammer candlestick pattern. So, it's a early reversal sign which requires more confirmation. And also, Nifty managed to defend the upward sloping support trend line, which we discussed yesterday, on a closing basis for yet another session, which is a positive sign and all indicating buying interest at lower levels. However, as long as the index stays below 21,850, the prevailing sentiment is expected to be sideways with a bearish bias. On the downside, a short-term important support level is 21,500. A significant decline below 21,500 could potentially initiate a correction towards 21,270/21,000. Conversely, on the upside, a decisive breakthrough above 21,850 might trigger a rally towards 22,200. Then, in case of Bank Nifty, on a closing basis, it climbed above 45,500. Thus, on the daily chart, it formed a bullish candlestick pattern which somewhat resembles the bullish harami kind of, which is also a early bullish reversal sign. On the closing day basis, Bank Nifty defended the 200-day moving average 44,900 and from there it witnessed a sharp pullback. In normal day scenario, this pullback might continue towards 46,100 to 46,200, but I doubt it today because of this very bad inflation data. So the immediate support is at 44,900, which coincides with 200-day simple moving average. Then if it breached below, subsequent Fibonacci support levels are 44,660 and 44,400. On the options front, the maximum call option open interest was at 22,000 strike, followed by 22,500 and 22,200 with meaningful new call option writing at 22,000 strike. Thus, from the options data, 22,000 is expected to be the key resistance. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 21,500 and 21,600 with new put option writing at 21,500 strike. Then 21,000 and 21,600 strikes. Hence, with immediate support is at 21,600 and then 21,500 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any registration based on this as I'm not a SEBI registered advisor. I am doing this for my and viewers educational purpose only. Thanks for watching.